Now that we've gone over pretty much everything you need to actually get funded in terms of getting a strategy, getting the technicals down for that strategy, and all those good things, now it's actually done in terms of more of the technical aspect and all the different concepts and the ones that work with examples and all of that stuff. So you have your daily bias, you have basically everything in the strategy. So in this video, as you would have seen from the title, what I'm going to be going over is the trading plan. Now, if you don't have a trading plan, then you're just trading like just randomly. You're just looking at the charts and saying, this looks about right. This looks like a trade. I'm confident. It's basically very discretionary, if you get what I'm saying. So the whole point of a trading plan is to cement those rules down on paper. And yes, I mean paper, because if you just keep it online, then let's be honest, you never look at it. I personally had it online on Notion and even a Word document, but like it was there. I just never looked at it. So the whole point of today's video is to actually get a piece of paper, a pen, and write down these things and stick it in front or next to wherever you trade. So that way, whenever you take a trade, you're always going to look at this trading plan and you're going to be accountable to your trades and not blame the market and basically some external force out there that's making you lose trades, when in fact it's you, it's not a strategy, which I'm sure you've heard many times. So in terms of trading plan, let me get my glasses on. This is what you want to do. You want to get a piece of paper, and the first thing you want to write is the pairs that you're going to be trading. Personally, I would say if you're just starting off, just put Euro USD, because mastering one pair can get you a lot of profits basically, and also teach you patience, which is a really, really good trait. And also, what else can do? Save you from many, many losses. Okay, because the less pairs you trade, the less losses you'll take, right? If you're trading 5 pairs, you could have 5 consecutive losses, 1 on each pair. Altogether, that's 5 losses. Whereas if you just trade 1 pair, it's just 1 loss, right? So have that. Second thing you want to put in your trading plan is your session timings. Which session are you going to be trading? Is it the London session? Is it the New York session? Or is it both? Maybe you're looking for a power of 3 setup in the London session, and then you're looking for an optimal trade entry, a retracement in the New York session, along with your daily bias. All those things, okay? So we have the pairs and we have the session. Next thing you want to add on your trading plan is any exit criteria. For example, for me, if there's any trades in the London session, I'm not taking any trades. Second, if there is news and I'm in a trade currently, whether it's in profit or in drawdown, if it's 10 minutes before a major news event, I'm canceling the trade, I'm closing my position. I don't want additional risk, because if there's a trade at like 1:30 UK time, 8:30 New York time, which is when most of the trades actually are, what you'll see sometimes at 8:25, you'll actually get a news spike, right? Sometimes the news hits early. So I don't want to be in that. So I even reduce it a previous 5 minutes. So overall 10 minutes basically before news event starts, I'm out of the trade. Now, next thing you want to do is look at your risk management. Okay. What is your risk to reward ratio? Are you aiming for a 1:2? Are you aiming for a 1:3? 1:4? Personally, I would say just do a 1:2, as it will, increase your win rate, and it will also help with your psychology, right? Because you won't be looking at constantly going for 1:3, 1:4. It will just help you with that. Personally, what I'm trying to do now actually is just set the trade. Once I know I'm in the trade, then I just switch everything off and I focus on something else. So instead of constantly having my phone constantly looking at it like that, is the trade working, is it not? It doesn't help with the psychology. I've been there many times, it doesn't help. Then the next thing you want to do is your entry criteria. So now we've got the pair, we've got session timings, we've got exit criteria, we have risk management. Yeah, also in risk management, how much are you going to risk per trade? 1%, 0.5, 0.25, even 1.52. Just put that down in your trading plan, depending on your risk tolerance, and it should always be there, and stick to that no matter if you're on a winning streak, losing streak. Just stick to that, because the strategy over a large sample size will play out. Now, in terms of the next thing on your trading plan, what do you need to enter a trade? Or let's start with confluences actually. What are some things that would make the trade high probability? For example, in my strategy, and the strategy that you've learned actually in this course, is confluences such as we've tapped into a previous high time frame fair value gap. We've tapped into a high time frame order block. Okay, we've tapped into a high time frame supply zone, demand zone, all those things. Those are confluences, added things that make your trade more likely to play out, okay, or a higher chance to play out, basically, right? The ICT power of 3, the Asian high, the Asian low getting swept, That's a confluence, okay? Buying below and selling above the midnight opening price, that's a confluence. So make sure to write all these confluences down and just tick them off every time you're in a trade. Obviously, you can't really tick them off on the actual trading plan because then it'll just be a messy piece of paper with a lot of ticks, but mentally tick it off. At least you'll have that physical trading plan in front of you when you're trading, okay? Now, next thing is the most important, which is the entry criteria. Now, I would say just have like maybe 3 or 4. For example, for me, it's simple. I need a liquidity sweep, I need a break of structure with a body, and I need a fair value gap to form, or according to the midnight opening price, which you would have seen in this course. So once that's all ticked off, only 3 things, right? Once it's all ticked off, then I'm entering a trade. If even one of them isn't ticked off, let's say we get a liquidity sweep and a break of structure, I'm not entering the trade. Simple, right? I don't care how good the setup looks, I'm not entering it. And it can go without me, whatever. I'm being disciplined to my plan. I've back tested it, and why would I take the trade if it's not marking all the criteria? So have those criteria marked out, whatever it may be. Maybe for you, it's a liquidity sweep, break of structure, and an order block, okay? If that's the case, you back tested it, then put that as your entry criteria. Just basically, all I want you to do is put maybe 3 or 4 things on your trading plan as an entry criteria and make sure all of them are ticked off when you're taking a trade. So I'm on the computer screen, I'm watching the trade, I'm about to place it, I look to my left, look at my entry criteria, what do I need to enter a trade? Okay, tick, breaking market structure, tick, 𝗓𝗂𝗂𝗲, okay, opening price, done. This trade is valid, I'm entering the trade. That's how you do it. Rather than just like having it in your head and being like, this looks like such a clean setup, oh, the market's going to go without me. All of those things are just promote FOMO, right? Fear of missing out. So essentially, that's all you need in a trading plan. Keep it short and simple and master it, follow it, keep it in front of your desk in a physical copy. I don't want you guys to have it on your phone or something, you know, in a Word document online. If it's a Word document, print it out and stick it with blue tack in front of your monitor, next to your desk, wherever. You should be able to see it every time you're about to take a trade, basically. And this is the trading plan section of the series. Next, we're going to be going into more psychological. It's going to be less technical and more, you know, just talking about my own experiences, what I felt in the market, how I'm planning to overcome it, because I'm not perfect at all. As like, I don't think anyone's perfect in trading, but everyone's got a lot to learn. I've got a lot to learn. So I'm just going to be sharing those experiences with you. And pretty much that's how we're going to be moving forward. I will also be showing you how I backtest. We'll do a backtesting session and forward testing, all of that, how to journal, those things. That'll be coming in the next few weeks. And pretty much 2024 video is going to be coming too. My goals and everything, what I'm going to be doing to achieve those goals. Is a very, very big year. That's going to be coming out too. And then after that is going to be a lot of relatable videos, a lot of just sit down videos, me talking about trading, talking about some hurdles I've had to go over, some things I'm facing, struggles, accomplishments, aha moments, as people call it, those sorts of things. So I just want to sit down and just be transparent with you guys, right? So that is the plan for the next few months, and we'll see how this channel goes. Hopefully you guys like the videos are helping you out. Hopefully you can apply some of these things and they are actually making sense to you, because that's like the main thing I'm trying to do. And pretty much, yeah, without further ado, I will see you guys next week. As usual, happy trading and stay safe.